Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Good evening, everyone. It is Friday, actually still, April the 4th, 11 p.m. In case that's lucky. Let's see. I don't see the patterns that we look for. Let's see here. No, not really the pattern. Let's see. It's 15-minute had a little bit of a pattern here the other day. That's the one I told you about on the Russell 2000 in reverse. So looks like a but the volatility moved up today and then back down. See, like I said, most days, what's the market going to do? It's going to move up, move down, move sideways. What did it do today? Move down, up, sideways, pretty much the whole day. Nothing new here. Only thing we want to see is uh, a um, a pattern that uh, defines what it's going to do for an more extended period of time or more uh, rational pattern instead of the wishy-washy stuff. Like this is not what we saw, not a good pattern because the volatility kept moving up. So if you keep a close watch between this and the other thing, then you'll know which direction it's headed. So volatility, well, just about closed at the high and the market closed almost at the low. Um, so uh, I don't know if we want to take advantage of these kind of things. Things to take advantage of when you see markets like this is the SPXS or the short indexes or the Qs or whatever. They had a low the other day of around $7. Then today about $9 or something. So that's what I don't know, about a 50% move from 688 to 936, about a 50%. So that's pretty good considering you're not using any leverage or anything on the thing. Just not options anyway. Nothing you have to worry about that expires. And you can hold this indefinitely if you wanted to. But same thing basically is true that we're looking for in the market patterns. Um, but you don't have to worry about them expiring worthless on you or something like that. So 50% is better than no percent. And the Qs are pretty much the same thing. Russell 2000, however, uh, had a pattern that was kind of signaling an advance in the price here. It was very close to a double bottom and upside divergence, so very close to it. But still, you have to be careful about what volatility says, even though the Russell doesn't have a tendency to follow it um, as closely as the SPY and the Qs do. So let's just take a look at just for something to do. 0404. And we're going to look at call options, believe it or not. 85. See, like here today, about 130, something like that. They were trading for about 10 cents and they moved up to 65 cents. You see what I'm saying? Within the hour or so. And that is, oh, call options. You see, I don't care that the market was down 2000, you know. See, I don't follow the markets and what it's going to do and how much it's going to move. I don't really care about that. I'm looking for a pattern. Uh, and believe it or not, you make 6 times your money on call options today, not put options, call options because of the pattern. Believe it or not. And the market slid. Let's see, this was today here. The market slid down to 176. Let's see what the put options did. 2504 04 puts 175. So uh, 20 cents to about $1 or something like that. Uh, but yesterday, you know, there wasn't really a pattern, so I can't really say there's an entry. But from yesterday at the close, they were 3 cents and then to $1. And so that is a 30 or 40 times your money on that front. But so what? If you missed it, it's no big deal. You know, like I said, make money on call options. The SPY, maybe about the same thing. A pattern here. Let's see. We'll do it again. Remember, 2 minute chart, pretty close to a double bottom. This was at after 3 o'clock. So the call option, so it went from, let's see, the stock went from, or the index went from 506. See what I'm saying? 506 to 513 on the call side. The what side? Yeah, that's right. The call side. So if you have volatility for that period of time, uh, you know, saying that it should advance, then it will. So let's take a look at 514, let's say. Whoops, too many. And that was toward the end of the day. That was about 304, something like that. So about 308. So they were a dime and they moved up to uh, excuse me, I was all choked up there. Uh $1.47. You see what I mean? So from 308, whatever it is, just cheap to uh pretty good return, wouldn't you say? Beats working for a living. Take a look at that again. See, we're looking for a pattern. Remember, it's either the indexes have the proper pattern themselves or the volatility. We would prefer both, have the right pattern at the same time, like we've seen before, and we'll see again many times. But even so, for those who pay attention, when you see this kind of a pattern on a 2-minute chart, even though the market closed at a low down dramatically, right? Doesn't have anything to do with what we're looking for. See, we're just looking somewhere within that mix. See if the market goes up and it goes down. See how what it moves to, it moves down, then moves up and sideways, and see that's what it does pretty much every day. We're looking for somewhere within the context of those patterns, of the context of that movement, to see a pattern. See, like this one had a pattern where, see, this was not nearly as low. See what I mean? So there's the previous low here, and this one here is higher, but the price is much lower. See? So 508 to 515, 516 almost. So that was from 120 until 202, 2 o'clock sake. Okay. So keep that in mind. Those times just after 1 o'clock. And say it moved to 515, say. So they were 82 cents here. They're really, or 95 cents even, pretty expensive. But nevertheless, but by 2 o'clock, they moved to $3. So that's more than triple your money on call options again. So wasn't quite far enough out of money given that we had quite a few hours left in the trading day. So let's take a look at $3 strike price higher up. And those are still pretty expensive. 41 cents at after 1 o'clock, or 57 cents or whatever. And then they moved to $1.54. So again, almost triple. So there's always ways to make money on call options and put options if you don't have any money invested in the market and you just wait for the options to appear. And remember, just like we did a few days ago, the closer to the end of the day and the lower the time frames you can find that have the pattern, it makes a dramatic change in your portfolio. So 10, 12, 15 times your money, just like that. Bam, bam, bam. Just like, in a blink of an eye. So $1,000 invested, 15,000, $10,000 invested, 150,000, just like that. On call options, go figure this kind of stuff. You know, one of the same thing is true with the Qs. Yeah, it appears so. So they were 424 about, and this was after 3 o'clock. From three, remember, 424 up to 431. Okay. So the last hour of the trading day, what does it mean? See, right here. See, right here. See, we're looking at, these are about 20 cents, but even so, 20 cents to $2. See, 10 times your money, just like that. Bam. Who cares if the market goes lower? It doesn't have anything to do with what we're doing. So you just reach in there in the middle of all that onslaught of selling, and and you take some money out, on call options is unbelievable. And that's when you think you've missed everything. See, it's not true. You only miss everything if you stop watching. So I'm going to leave you guys with that little bit of information there. And it's never a bad day when you trade options when there's a little bit of volatility involved. Doesn't matter that the market sells off and everybody's running for the hills. So what? Talk to you later. Have a nice weekend.